China, Europe, and earnings take center stage Tuesday. China's economy grows 9.1% in the third quarter, missing expectations, igniting some worries of a hard landing. And Moody's might issue a negative outlook for France's AAA credit rating. Futures are mixed as IBM sells off after its third quarter earnings result. Bank of America makes 56 cents a share, and investors brace for Apple's earnings after the bell. Expectations are high, and so is this stock, hitting a 52-week high. I'm Alix Steel, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Alix Steel with The Street, and together we bring you the morning call. Scott, S&P down almost 2% on Monday. We were looking for a correction. Did we see enough, or is there still more room to shake out here?
I still think there's a bit more room to shake out. We've had a powerful two-week move. We had a move where we went almost 14 to 16%, depending on whether you look at the spiders, the OAHs, the Qs. So a 2% pull-in is not a lot. In the last 2 weeks, we haven't had a pull-in more than that. But when you get to the top of the range and you get some inline earnings that aren't impressive, and you get some headlines out of France that the banks could be downgraded, or you get, the rhetoric from
the country government debt, even worse.
Exactly.
On review for negative outlook. So does that mean that we have more room?
Yes.
More digestion?
We have some more room. We have some digestion. But what we have to do is we have to follow our retracement rules. We need to make sure there is commitment to what was a nice move. Because if there isn't, then everyone's going to say this was just a range trade. This was just a trade where if you were quick and active and prepared, you could have made nice money, because we went 14 to 16%. And most guys like myself are trained to take 5 to 8% out of that move. And we're not looking for it to get extreme, or we don't buy in the upper end. But unfortunately, that's where the retail investor buys. And unfortunately, most of the world doesn't pay attention until things get a bit more positive, and then recently that's where we start to fade and reverse.
All right, so to avoid making that kind of mistake, what does everybody need to do? Let's look at the chart and see what that key support level will be and how you're going to trade it.
Okay, well, I'm going to put the retracement rules on the chart once again so you can take a look. So take a look at the chart of the S&P. This was the move from the low of that Tuesday, the 4th, all the way up to yesterday's resistance. So if you put these Fibonacci retracement levels in here just to measure that, I'll show you. It's very, very fancy. I'm very fancy here. Okay, you come up to the upper end right here, you will see the levels that I'm going to be watching. One of them being 1188, which also coincides to where we held last Thursday. So that level probably will be tested today. I will see if we could buy here, but I'm not sure if this is going to hold. I do think a more compelling level, a level that could be tested within the next few sessions, could be the 0.382%, which is the top third. What you want to do is just say, I tried to explain this psychologically yesterday. Just say you have a move from 5 to 20, and people miss that move. Okay? The way the retracement rules work is this. If you go from 5 to 20, and then all of a sudden you come back to 12 or 10, people are like, that move wasn't real. If you go to 5 to 20, and you pull back to 17 or 16, and then buyers say, I'm not going to miss the move to 25, 30, I better get in there. That shows commitment. So what I want to see is commitment. People missed this rally. If they want to get back in for higher prices, that 1170 to 1175 is the area that has to hold to keep the upside momentum.
All right, so does that mean that you're going to be looking for those support levels to then go long in certain stocks and then a short on the way down? Is that what I can get?
At this point, I didn't take the cute short. I just sold a lot of my longs last week into yesterday. So at this point, I'm going to test the support of around 1190 to buy. I'm going to look at the leaders. I'm going to look at any of these stocks that came out with earnings that are down. Do they trade off their lows? But I'm really going to take a close look around 1170 to 1175. I'm going to attempt to buy back some of the stock that I sold and see if we get any kind of relative strength out of groups that could help lead the way.
And talking about where to find the relative strength, we have to look at the stocks that have reported earnings. Two big bank names this morning. Bank of America earning 56 cents a share. That's versus Reuters estimates of 21 cents a share, but we don't know if that's actually comparable yet. So what's the stock doing pre-market?
It was up 15 cents right off the headline, but then people started talking about how it's not quality earnings. There's so many things in there that we don't understand, and now it's down 20 cents. Bank of America has been the whipping boy of this group. If you look here, this, I guess, could be somewhat constructive if it holds here. I guess I'm reaching. Put a high in here. It's pulling back. I'd like to see it hold at least this 565. I'm not going to be buying it, but I just want to see, as far as market psychology, this hold, because if we start heading back down to the lows, it's going to be very hard for the group, the financials as a whole, to hang in there, because we've already seen some weakness in the XLF, and it already broke a level. I was hoping that it would sustain.
And then, as we were talking about before we got on camera, you know, it's sort of buy the rumor and then trash the news if it's a bad quarter, or buy the rumor and then sell the news even if it's a blowout quarter. So that's doubly so for Goldman Sachs, coming out with a loss of 84 cents a share compared to an expected loss of 16 cents a share. Again, we're not totally sure if that's comparable. Revenues came in at $3.59 billion versus estimates of $4.3 billion. This looks like that's going to be an ugly day for Goldman. Is that what it's technically shaping up to look like?
Well, it also had a small move off the lows. The question is, can it hold above those? So I just ran out before to take a look where it was trading. I think it was down $3, over 2%. If you look at Goldman Sachs here, if you want to see some support, you know, it already seems like it's breaking. I drew this yesterday. Let's take a closer look. It seems as though it's going to try and break this little wedge to the downside. So at this point, you know, if it doesn't hold this 92.25 area, it could go back to those lows quickly, and that's not good. Okay, that won't be good for the sector.
Would you be shorting this, or you just want to let it shake out?
I'm not, down here. I'm not going to press it down $3. I'm going to watch it versus the levels, and if it doesn't break and bounces off it, I'm going to stick with stocks that are acting a lot stronger, a lot easier to trade. But if it does hold, you know, I'll probably go after more of the indices, the spiders, and maybe even throw some XLFs on, just even though it's a slow type of snail trade.
So then what about IBM, though? You know, it has a pretty solid report. Yeah, okay, revenues were a little light, but earnings were definitely beat there. I heard media attribute this to, you know, not the stock selling off, that there declined to lower sales or weak IT spending, but none of this was necessarily a shocker, and the stock was near 52-week highs. So could it just be profit-taking that we're seeing in IBM?
That's all I think it is, because the stock had a huge run. The stock went from the lows to new highs, so it had to be a blockbuster report. It was strong, and in these economic times, I think it's very impressive. But as far as the move that it had, that's why you always have to know where your stock came from into earnings to know what it would need to sustain the move. And if you look at IBM, it had a huge move. Okay, this was a big move into new highs. One of the few that actually has made historic highs, and it's, you know, paid investors to buy and hold, which is very limited in this type of environment. Yesterday you had a down day. You know, I would say look to see if there's a trade here. I think it's trading as low as 178, so it's coming into where it broke out prior. I'm actually, as a trader, I'm going to look to see if I could buy this down open, you know, right around this 178, and if it does hold, maybe it moves up a little bit. And as an investor, you know, if you sold some of the strength, you could probably buy the dip, and there's a lower moving average. If it doesn't hold and it doesn't trade off those lows in the first 30 minutes, it could easily see the moving average down here of about 170 to 172. So just know 177 to 178, and then 172 to 173 for support.
All right, and then three stocks really quickly. We have like a minute here. We have Citi and Wells Fargo reporting yesterday. Citi was a good report, sold off. Wells Fargo, bad report, and tanked. So any trades here with these two you need to avoid?
Just avoid them, because that's frustrating. Citigroup, decent report, didn't really run so far into earnings, and they tried to hold up. They just sold it. Wells Fargo, they were expecting much more. It's always been a much more quality name, and they disappointed, and it was down 8%. Both those stocks are too hard to figure out. I'd avoid them. They're a lot easier things to trade. And
then I do want to touch on Halliburton, because it beat on the top and bottom line, but the shares got punished nevertheless, down 7%. The only negative I really saw was that they said that North American E&Ps could reduce capital spending, so there's some moderation in growth or even a decline in rig count, but nothing like 2008. So to me, if that's the worst thing in the world, that's not so bad. Would you be a long buyer here?
I think you could look at it, but what's more important here is to see how it traded after results. We talked yesterday how Halliburton had a nice, move into earnings. Was it enough, or will they just sell it? So I don't like the pattern that I'm seeing here. You know, stocks that have even decent numbers, just because they had a little move up into it, they're selling. So that means that it's going to be hard to sustain any type of rally. And if you look at Halliburton, you will see yesterday was a pretty potent day. Now, you did have a move off the lows. Okay, this was your buy strategy, and obviously you don't take it into earnings. You know, this day engulfed this entire upper range. I do think if it breaks below this, what is that area? That's 34? About 34. You know, you're going to see a move down to here pretty quickly. It rallied into old resistance, well off the highs, below the moving average. So it's been a weak stock, so they're using this excuse to just sell it. All
right, fair enough. And we will be right back after this with how to trade Apple into and after earnings. So stay with us.
When the closing bell rings, it's not quite time to run off to happy hour.
Good afternoon, Scott Redler, T3 Live. Welcome to today's recap.
Before unwinding, take stock of the trading day. What's the complexion of the market? Which trade from the morning call triggered? What sectors are in play? And where will the opportunities be tomorrow? Scott Redler covers it all in the T3 Live Daily Recap video. The T3 Live Daily Recap airs every day after the close.
As far as these markets are concerned, you know, we got to take off those glasses
All right, we're back, and Apple is the topic now of the day, reporting earnings after the closing bell. So, Scott, expectations are really high for the stock. Shares are trading near 52-week highs. They're expected to report earnings of $7.24 a share. And according to Capital IQ, it's had 16 upward earnings revisions in the past month. That's a lot. So is a blowout even enough to move the stock higher, or is it a sell no matter what?
In this market environment, it makes it tough. 16 revisions to the upside. That means it's got to be a great report. Plus, it's trading near all-time highs. So as an investor, you've been rewarded for holding. Even short-term, if they sell it off, it probably goes higher at another time. But short-term is the way I trade, and I'm sure investors are looking for some type of cash flow, so it makes it tricky. If you take a quick look at the chart here, you'll see there was a lot of calculated areas to buy. This was when we held the 200-day. This was a support to buy versus the prior support. Then for momentum, it broke above this 385, and then it even broke above this area. Yesterday, I actually sold my long when it broke through this 422 and came back below, and I said, I will figure it out as we get close to the earnings. So now, at around 3 o'clock today, I'll see where Apple is, and I'll figure out whether or not I want to take the risk of taking an in-the-money option trade, because there's going to be a lot of vol in there, so it's going to be a big premium to pay. I do think that they're going to come out with a great report. The question is, how will Tim Cook be on the guidance? Because they're always fugazi on the guidance. They always lower the guidance.
And what to do with all the cash that they have. I heard it's going to be over $80 billion they're expecting now in cash.
I've made so much money trading Apple alone that I'm going to probably have to take it into earnings with some kind of option play, just in case Tim decides to do a 3-for-1 stock split. Okay. I think we talked about it with Google. I said Google's number is great, but no one feels comfortable owning, a close to $600 stock. Just to give you a quick look at Google after a great report. This was the report on Google. Obviously, if you bought it the day of that great report, you're already down almost 20 bucks. And look what happened the last time. Great report went up and then failed. So, this I was actually drawing here. I'm going to look to see if I can buy Google right around here. This is a little preamble. But anyway, with Apple, it's going to, people are probably a little worried to see that great reports are being sold, and even Apple in this type of market environment, once it's out, the shorts know that nothing else will be in the way, so maybe they pressure it for a bit. So just be very careful. If you're a long-term investor, stay in Apple. If you're looking for a short-term strategy, tune into my radio around 3:30, and I'll give it to you then.
All right, so then I was interested in perhaps there might be some derivative plays to Apple if you don't want to touch the Apple stock on earnings. My colleague at the Street, James Rogers, did a great article on the guts of the iPhone, one of Apple's best products going forward, and what's in it if there are any trades. So the two we talked about yesterday that I want to hit on again are Qualcomm and TriQNT. Qualcomm has RF transceiver appears in the iPhone 4S, and TriQNT has 2 chips. Right. Both stocks are kind of struggling here. Do they present any sort of buying opportunity? And would you want to be looking at them after Apple reports?
Yes, you should look at both, because anything that's involved in Apple's food chain will be affected, whether it's only psychological or whether it's for the long-term reasons. Qualcomm has been a chosen stock, investment quality. I think if you're an investor, this is a stock that could be in your portfolio for the longer term. It's above moving averages. It had a nice move, so it showed relative strength. I think after yesterday's down day, perhaps it's more buyable around 51.70. And for those of you looking for a new name, this is definitely riskier. This TriQNT, I think it's the first time they're getting involved. That's why you saw this excitement here. As long as this flags, in this area, I'm not involved yet, but if this starts to get above this 775, I'll get in there for a trade to fill this gap up to 9.5. But for me, it'll be a trade. For you, it could be the same, but right. I think Qualcomm is the quality name you could hold for the longer term and not be as worried. One
other name I want to look at is OmniVision. Has the camera for the iPhone, sort of ran up into that iPhone announcement, so people were trading it off of the iPhone 4S announcement and then sold off after that. Would you be looking at this stock, perhaps?
Yeah, a lot of guys were trading that. I took a pass on it. There was a lot going on, so let me take a quick look at the chart to see what's going on. Yeah, this is actually a pretty ugly day. You had a quick move off the lows, and then it tried to go on that excitement and then failed. I would just avoid this.
All right, and we got to get some quick ways to make some cash. It doesn't have to do with earnings. Let's go to Green Mountain Coffee. Got hammered yesterday. We had David Einhorn attacking the company at a value investing conference, attacking the fundamentals like it's a luxury, not everyone's going to buy this, but also saying that they might have some reporting issues. That he doesn't trust the reporting results. How are you trading this stock? It was a great trade for you before.
Well, thank goodness this chart has shown some weakness. Thank goodness you've seen some technical damage, kind of like you saw in Netflix before it got crushed. So Green Mountain Coffee was a great name, showing momentum. Sometimes when markets go down, okay, you see relative strength to buy, but also when they go up, you see relative weakness. And in this last market move to the upside, Green Mountain Coffee did not act well at all. It broke this upper level, in that 2-week range. the stock put in an ascending channel. I talked about this. This was actually in my off the charts. So it was pretty faulty, and then yesterday finally it broke this to the downside, and now I think this stock could see 75 to 73 after some more sideways action. So I wouldn't be buying this yet, and if you were short, cover a little bit, but I think you could trail it and you see lower prices.
All right, 4 stocks. 1 minute. Let's see if we can actually do it here. Las Vegas Sands down almost 1.5% on Monday, but almost flat for the year. What do you kind of do here?
Big move off the lows. Stock acts well with the market. I think if it holds above this 43, 44, you could be a buyer if momentum comes in above 45.5.
And SanDisk reports on Thursday. What's like the pre-earnings trade?
SanDisk was one that we bought around 44, 45. We sold it. I like it. I have to show you the chart quickly. If it comes back in and retests this neckline, or this, not neckline, this downtrend that was the recent pivot, I think you could buy it, but I think you wait until about 43 and just make sure that you know your risk tolerance with earnings. If you don't want to hold through the earnings, then just take some in-the-money calls, and also watch how it reacts after Apple's earnings tonight.
And what do you do with the OIHs, you know, getting hit after Halliburton's quarter? Schlumberger reports Friday, so how to trade this whole oil services sector around these earnings reports? It doesn't seem to think that investors like at all, even if they're good.
Both of these groups had big moves off the lows, right into resistance, so the same thing goes here. Measure the pullback, see if it could continue. So OIHs failed yesterday. They were weaker than the other groups, so I would take notice there. So if you look here at the OIHs, you will see, I already did this work last night. This was into resistance. You know, actually look here. It retested this broken pennant. Okay, so it just shows you that levels work and prior points become, you know, points to watch. So this is the first move down. It's 0.25. I think these OIHs get to at least 112.32 before you actually, you know, even think you could buy them. But if we don't hold the 0.38 on the spiders, you know, you're going to see it go to at least 50, if not lower. So, you know, watch 112.20-ish.
Okay, busy day.
Yes.
Busy day, lots of earnings, lots of stocks to digest. So happy trading, everybody, and good luck.
Good luck. Well, you don't need as much luck if you have these levels in front of you, because the market's going to move fast, and as long as you have areas outlined that could pose as an action area, you're ahead of the game instead of like looking all around saying, oh, wasn't this the area? Wasn't this the price? Have it in front of you. Have a plan. You'll be much more efficient as you trade moving forward.
Happy trading.
Yes.